Social Security is an important part of a retiree's income, yet most don't know how it is taxed. Today we're going to discuss how it is taxed and 3 solutions to help you lower your taxes. Stay tuned. Hey there, it's Alex and Anthony from One Degree Advisors, and we help you gain confidence in your retirement. So Anthony, Social Security income is taxable to most people in retirement, yet many retirees are surprised by this. They didn't know it was going to be taxable. And if they do, many people just don't even understand how it's taxed in the first place.
Yeah, so let's first talk about just how it's taxed. And if you have other income besides Social Security, then it's very likely that you're going to have some of that taxable. They do take into account your total income, your filing status, the amount of your Social Security benefits. To be more specific, and we'll put the calculation here up on the screen, is they actually they add in your adjusted gross income plus non-taxable interest. So if you have muni bonds or something like that, and then 1/2 of your Social Security benefits. And you can see by this chart where things break down, and you basically can have 0%, 50% of it taxable, or up to 85%, which is where it caps out. There is some increment in there, so it's not quite as clean as just each of those brackets. I found a good calculator from PacWest and Pac Life, and they basically have a good calculator that you can run your numbers through.
And some people might be looking at these numbers, especially folks in Southern California, and go, wow, well, my AGI or my adjusted gross income is way beyond that, so why am I even watching this in the first place? But we are going to talk about a specific kind of like sneaky Social Security Medicare tax that is important and ways to reduce that as well. But a few notes before we discuss some strategies to minimize the tax. The first thing is that these income thresholds are not adjusted for inflation, and that's part of the reason why they're so low, right? They went into effect a long time ago. They have not been updated for inflation, and so it's possible that more of your benefits may become taxable over time. The other thing is, what you just described was federal taxes, but of course, for many folks, depending on where they live, state taxes is another piece. And there are 37 states, we'll put this on the screen, that do not tax Social Security. Here in California, it's one of those states that California doesn't tax Social Security benefits. So maybe it's just the one benefit of California where they don't tax something. Right. But again, that's a perk there.
Yeah, third thing is, and I want to put this summary table up on the screen. This is what I mentioned from Pac Life as far as how things can be tax, or it's not quite as clear as 0, 50, or 85, the way they like to describe it. And you can punch in your own numbers and see where you fall in. We'll post the link to that as well. And then the fourth thing is that, like you mentioned, with Medicare premiums, so most people associate their Medicare, they're paying their premiums through their Social Security income. And these brackets increase at a much higher level. So if someone's making 6 figures, even up to past $500,000, they're really affected, or can be affected, by the amount of income they have and then how much their premiums go up.
Exactly. Social Security brackets, those are a little bit smaller, so they impact a lot of people, again, especially folks in higher income states. But the Medicare brackets can really affect, and that's where you can have good planning involved, right, with the Medicare piece. All right, so now we've covered Social Security and how that's taxed. Let's talk about strategies that we can implement to minimize that tax. And the first thing is controlling your investment income.
So investment income being taxable, it falls onto that tax return, and then you're paying taxes on your interest, your dividends. And a lot of times people think, well, if I just get the highest dividend I can out of a stock, and we've talked about this before, how we really prefer more of a total return approach to investing overall. But if you have high yielding type investments, you really want to put those more into an IRA where things are tax deferred, and then control your investment income through more like capital gains planning, because it does have an effect on your Social Security.
Yeah, tax planning is a huge piece of what we do, and that really can make a big impact for folks beyond just good investment planning. The second piece here is charitable contributions, including QCDs. So you can get your income down while also making impact with your wealth, doing so in a very tax efficient way.
Yeah, so keep in mind that far fewer people are itemizing their tax deductions after the tax reform in 2018. Standard deduction's much higher. People are taking that. So a lot of times we'll look at a client's tax return, they're making charitable contributions and they're getting zero tax benefit from it, which is why we're really high on qualified charitable distributions, which basically just means you're giving to charity out of your IRA.
Yep.
If you align that with your required minimum distributions that you have to pull out of those IRAs, it can be a very effective strategy.
Yeah, that can be a double win there. And the third thing here is making sure that you time your Social Security correctly.
That's right. So a lot of times people ask, well, should I take Social Security early? And yet they don't really need it. But remember, that's taxable income. If you don't need it, oftentimes that can make sense to defer it. It does increase your Social Security benefit about 7 or 8% every year by waiting up to a max of age 70.
Well, that specific question, should I take Social Security early, or maybe should I just, like take it and invest it, or should I wait and let the benefits grow? We address that specific question because the Social Security Reserve Fund is scheduled to run out as it stands today in 2035, and we discuss what that means right above here. Once again, this is Alex Okagawa with 1 Degree Advisors, and if you'd like to learn how we can help you with your retirement, visit our website at onedegreeadvisors.com/get started.